All right, everyone. Welcome to the Story Trading VIP weekly meetup. Just a quick reminder, Story Trading is not an investment advisor. That goes for all of our guests as well. Investing in securities involves significant risk of loss. This event is being recorded. It's going to be provided to our VIP members for a period of about 7 days, and then we'll post this up on our YouTube channel thereafter and Spotify as well, actually. All right. So agenda, we'll do a macro discussion. I'll do a quick, very high-level overview of a couple of my thoughts, but then we'll spend the bulk of our time with Vince Capadia to go over his chart, since he was here last week and everyone loved him. And so I asked him to come back, and he graciously taken some time from vacation to be able to do that. And we'll get Chris Tabert on CLFD. He did do a mini presentation for us in one of our morning shows last week before earnings. Actually, a late morning special edition show before earnings. Earnings came out. It looks to be good. So he's going to give us an ER review of that. And then I'll give you some updates, some due diligence and nugget updates on Seek, Drio, CFVI. All right. So we got Chris Tabert here. Sorry, we're late. On Clearfield Communications, CLFD. It's a $800 million market cap company. Last trade, $58. We had invited this. Actually, we didn't invite. Investor Relations offered their CEO to us, I don't know, like 6 or 9 months ago, and it did very well. I think it was up like 45% since she presented. This is the first time we have someone from our community presenting it. So appreciate your time here, Chris, so we can get a greater understanding of some of the aspects of these 4 pillars we do at Story Trading to understand what's going on with this stock chart. So Chris, Clearfield had earnings on Friday or Thursday. When was it? Thursday after the close?
Yes, Thursday.
Thursday. All right. So why don't you give us a quick overview, if you can, about what they do for people who aren't familiar, and then dive into your thoughts on earnings and where you think the stock's going to go.
Sure, you bet. Yeah, quite the lead in with the broader market doom and gloom to focus on individual securities. But luckily, Clearfield, unlike some of the other stocks that are talked about, in the story trading sort of universe, Clearfield's got amazing earnings with strong revenue sector tailwinds. For those of you who didn't get sort of the precursor on Thursday, I'll give you a little bit of background. Myself, I've been in the telecom private equity world for the last 25 years. I've actually helped build metro fiber rings, so I got a pretty good handle on Clearfield's industry. I've been following the company for over 12 years. I've met with the management team at least a half a dozen times in their headquarters in Minnesota and in New York and in some other locations. So I'd like to think I've got a pretty good handle on sort of how they handle things, how they go about things, and sort of what their mantra is. For those of you who are interested in Clearfield, Ben's got a story trading WhatsApp group that you could take a look at. We posted some relevant information in the last earnings call, including some analyst reports that you can check out. Getting to Clearfield itself, Clearfield's a sort of fiber management connections, called company. Think of the sort of all the fiber connectors for 5G backhaul, for fiber to the home, fiber to the node, etc. They make a lot of the boxes that you may see in the neighborhood that house all the fiber components, etc. In the last year or two, there's about $60 billion coming into the space, a lot of it government funded, a lot of it geared towards the underserved or the rural markets, which Clearfield specializes in. They initially focused on the tier 2 and tier 3 markets. My estimation is they probably got about a 60 to 70% market share there. And they spent the last 3 years investing in getting to the tier 1 market as well. Getting to the earnings on Thursday, for somebody who's followed this company for a long time, it was an earnings report unlike one I've ever seen. Their growth rate and their infrastructure build and their inventory build has been so large in the last year that they actually went out and got a $40 million line of credit to invest to meet the surging demand that they have. Their revenue growth year over year is topping out at about 80%. Their earnings growth is well over 100% and looks to continue to climb. The CEO actually made some comments back in December that while they may be growing at 70%, they're looking to surpass that. And if one looks at the numbers, everything's basically, coming to a head. Last quarter, they tripled their production capacity in Mexico. They also doubled their capacity and distribution in Minnesota. And they're finally starting to get their arms and legs about getting those investments up to full capacity. Some of the comments that the CEO made is that this quarter, as great as it was, could have actually been better. She didn't quantify how much more revenue they could have pulled in, but I'm estimating at least 10 to 15% more. So when you look at how much backlog that they had, and the fact that they are going to, have the facilities ramped up here in the next quarter or two, you're probably looking at another, easily 10 to 20 to 30% jump sequentially, quarter over quarter in revenue. And I go back and look at what she said not this call, but last call, that says that she was looking to ship all of her backlog within the next 6 months. Well, fast forward to this quarter and she shipped 54%. Okay, so if you extrapolate that to her backlog this quarter, she did 135 million in backlog. And so if she ships again 54%, you're going to see revenue pop up to 67, 70 million. So if you extrapolate that to earnings using the same net income percentage, then you're looking at earnings going up to about 80, 85 cents a share. So the analysts right now, they're looking at around $2.60, $2.70 a share for 2022. I easily have them hitting $3.15. So then it boils down to, okay, what kind of PE do you assign a company that's growing earnings by, 100%? 25, 30, 35, 40 on a conservative basis. And then you can easily see where these numbers go to. Okay. Again, the government money that's coming into the space, the first sort of big tranche that's heading is called the Rural Development Opportunity Fund. She mentioned that they're just starting to get orders for that, and that's going to ramp up here in the next year. And the second tranche is called BEAD, or the Broadband Equity Access and Development, and that's an end of 2023 to 2024 event. And again, you're talking billions of dollars that are coming in to a sector where they're the leader. They're 60 to 70% market share. She also mentioned that she's now stealing market share from their next biggest competitor, which is CommScope. CommScope, which bought out a company about a year or two ago called Eris, has apparently been fumbling the ball. And Ben, if you could pull up Eris's CommScope's chart and compare it to Clearfield, you could see how the market share is starting to trend towards Clearfield's way. So I'll let Ben do that right now. But so she's actively on earnings call now, calling out her competition. So if they boost up to 80 to 90% market share in the sweet spot where all the government money's going, then you can see why she's tripling production, why she's getting this line of credit, because they're going to have so much business that their growth rate is astronomical right now. So I'm going to let Ben do that. And I'm also going to see if there's anybody has any questions while I slow down here for a second.
What was the competitor? The ticker symbol?
The ticker COMM.
Can you see my screen?
Yeah.
COMM. So
yeah.
You can see all right, you can see how they're performing price wise. I'm wondering if that's showing up in the fundamentals yet. Let's check revenue. Let's do a TTM on that. Yeah, you can see that Clearfield's accelerating revenue there. 97% versus 46%. There you go. That's the visuals on that.
So some of the other commentary I'd like to make is, look, this management team has been very conservative. They're conservative in their guidance. They're conservative in their numbers. And I've noticed a change in the last 2 to 3 quarters about sort of how more aggressive her comments have been, how she's starting to take shots against even her competition. So I just feel like that they're sort of the cat that ate the canary at this point. The amount of investment they made is unprecedented to their history. And for them to take these sort of drastic steps to, massively ramp up production, massively ramp up inventory, is they see such an influx of revenue coming on that it's an absolute no-brainer. The analyst reports, if you take a look at them, they even are sort of, laughing about how conservative that even their numbers are to this. So I think that this is a quintessential case of, under promise and over deliver. I've started to put together some numbers for 2023. Even a modest, let's say 20% growth rate to where I think their fourth quarter run rate will be. You're looking at 450, 470 per share. And, you guys can do the math at a reasonable PE of 30 to 35 on a company that's growing earnings by 100% year over year. I mean, you're easily getting into the $125, $140 price range. There's a lot of questions about supply chain. I think that's one of the reasons why you see them purchasing so much inventory up front. I think they had some issues with some specialty resin for their components and their fiber connectors that they've resolved. They've publicly admitted that they've been winning business and taking market share because competitors haven't been able to deliver. Clearfield in the last 5 to 10 years has always prided themselves in their fast turnaround and delivery, which obviously their customers want because they need to fulfill their orders to meet the standards of these government programs to get their product out, to be able to get more money, more government money in. What I would invite people to do is not only look at their earnings report, look at the transcript, but more importantly, Clearfield puts out a field report whenever they do an earnings report, and that will give you sort of the details and the background on how they're moving in this space. And they break out pretty good what the government money is coming in over the next 4 to 5 years and how long they think that this investment cycle is going to last.
Okay, I got a good presentation. I have a fundamental question I don't think I have a handle on. Who is paying them? Who's their customer? Is it the government directly or it's the carriers?
It's actually interesting. In the tier one market, it's obviously the big carriers, AT&T, Verizon, et cetera. There are other customers which could be considered tier two are the cable companies that are actually doing fiber to the home, and they've actually surprisingly, the cable companies are actually investing in that. Then you've got all of sort of the rural small carriers. They could be utilities, they could be municipalities, they could be local town governments, they could be wholesalers. Power and Tel is actually a wholesaler of their equipment, is a huge customer of theirs. They talk about this in their earnings call. They've got several customers that are over 10%ers, and they've got over 200 customers that are fulfilling orders, over $100,000 to $1 million per order.
So these government grants you're talking about, is that going to the cable companies and the wireless companies to use here in this use case?
To build their networks to underserved and rural markets, or in the case of tier ones, even to tier one markets. Okay,
so that's money that these companies have to use for these purposes. It's not like coming directly to Clearfield. It's going first to the carriers, and then they win the contract.
And they fund the purchase orders. Exactly.
Got it. Perfect. Okay. So a couple questions here. From Sanjay, don't the carriers use the wireless connectivity for backhaul in rural markets, as fiber would be very expensive to lay down?
In some cases, I would say yes, but in a lot of cases, especially in 5G deployments, because of the amount of bandwidth needed, they've got to lay fiber. They absolutely have to lay fiber.
What happens after all this fiber is laid down? Or is there recurring revenue here, or is this just so much build out for the last 20 years or something? Yeah,
unfortunately, it's not like software. So, again, that's always been an important question. How long do they think this super cycle is going to last? And, I think publicly they would say, well, we see it lasting till, sometime between 2026 and 2030. Now, there's always, international markets. There's always going to be additional markets. I know Clearfield's expanded into Canada and some other parts, but that's a great question.
Okay. All right. And that'll impact that PE ratio you're talking about.
I'm sorry, what?
The PE ratio, the multiple you get on the earnings. That's right. That'll impact that. If some investors think it's not going to last forever, what kind of multiple do you give it?
I agree. And again, look, they're not going to get a multiple like a software company, right? Because the counter argument be as well, it's fiber connectors and twisted plastic. So, they're not going to get a 60, 70, 80 PE, right? But at a, 100% growth rate year over year for the next 5, 6 years, I mean, at some point, maybe they would consider being acquired, but I think for the next 4 to 5 years, they're going to be running white hot.
In terms of the macro factors, let's say when we're watching this on a day-to-day basis, and let's say the market crashes and Clearfield is down 5%, would that be warranted? In other words, is there a fundamental macro issue here from either, well, you talked about supply chain a little bit, but inflation or consumer discretionary? Is there anything here that would warrant the stock to go down with the market, or would that just be a buying opportunity?
I think personally, I think it would be a buying opportunity. I mean, look, Clearfield's, and if you look at some of the material and some of the videos they put out recently, I mean, their solutions, and I talked a little bit about this on Thursday, their solutions are so easy to install that carriers, even T1 carriers, are finding it, 15, 20, 25% less to install. And also they sort of, I don't want to knock the installers, but they need a less sort of skilled or educated installer to put their stuff in. So they can prove out their case to their customers that if you use our gear, you're going to see your installation and your operating costs drop by about 20, 25%. So they've got a good value prop there. Now, on the contrary, what would be the argument, against them in a macro environment? Well, you could argue, okay, well, maybe people dial back their investment capital, their CapEx plans because of a recession, right? But then you could argue, well, if they're getting all this government money anyway, and there's a window to get the money, right? Then are they sort of, lack of a better word, recession-proof, because the government money's there to have. So unless the government, for some reason, turned off the spigot, which I doubt they would because the money's already been allocated for, the money is there for the carriers to use.
Okay, cool, good point. So 2 more questions, really focus on this same question from different angles. So Bart asks, what are potential threats to these very optimistic trends? And I'll throw the second one in because I think it's still related. Do they have an R&D budget? Are they working on any new products? So again, speaks to the sustainability of what happens after all this fiber is laid down.
Sure. I can speak to the R&D because I've actually seen some of that in process. They're constantly evolving products to what their customer needs are. They did spend a lot of money in the last few years getting their products certified to be in tier 1, and that was an expensive process. And you can sort of see it in their numbers if you look back in the last 3 years. Since they've sort of swallowed that elephant and they've got all of their products certified to the top level requirements by tier 1, I don't see too much R&D in the near future. But again, there's always products, especially in rural developments where, sometimes you've got harsher climates, sometimes that they've got to go back and, say, okay, we've got to make sure that this product can hold up in 30-degree weather if you're building, or minus 30-degree weather if you're building, doing a cable overbuild in Alaska and stuff like that. So I do see them, doing tweaks to make, some products, be a little bit more hardened. But I think the bulk of the R&D expense has already been done in the last few years.
Okay, and anything you want to add for Bart's possible looking for possible downsides? What are the potential threats to the optimistic trends? Is it just the supply chain? That sound like the biggest.
Yeah, I mean, look, there's always going to be supply chain and inventory issues. I guess the other threats would be either regulatory or for some reason that the $60 billion that's been put into this space gets dialed back for some reason. I don't see that happening. I think the one thing that COVID taught people is that with a lot more people working at home, a lot more people doing, sort of high bandwidth activities at home with 5G coming, I don't see, a high probability of that happening. All I see is, the quench and thirst for more people to have fiber at their house. I know when I moved from, Northern Virginia, and one of the first communities ever to have fiber to the home, to a house down in North Carolina that, it was lucky if we got, 70 megabits. It was a huge, it was almost like being depressed because if you had 2 or 3 more people in your house streaming, then, you know what happens, right? And when people get fiber to their house, they're ecstatic. And, with 5G backhaul and 5G cells, I mean, we know how far back the United States is compared to other nations in terms of 5G deployments. you know, in the next 3 or 4 years, it's only going to boom.
Okay, great. One last question from John. Is there specific funds allocated to this type of infrastructure in the latest bill? Which bill? I don't know about the.
Yeah, I'd have to go back and look. I mean, the first one is the Rural Development Fund. So I don't want to get too into the weeds of how that sort of process works. I mean, if you're a utility or a local municipality and you want to build a fiber optic network in your town or whatever, then you have to go through multiple steps of the government to sort of get access to that funds. And then the funds, you know, go to the actual fiber, they go to the construction, they go to the fiber components that Clearfield provides. So the money is there to build a network, but there are, you know, certain rules that you got to follow on sort of how that money's spent. But obviously Clearfield's in that sweet spot as materials that you've got to buy to do this.
Awesome. Excellent. So that was any last comments, closing and summary you want to add? Chris?
I don't. So if anybody wants to follow up, again, there's the Clearfield message board on WhatsApp. I'm happy to entertain any specific questions there as well.
Awesome. Thank you so much for your time. Great presentation. And we'll continue collaborating in that CLFD research room.
Great. Thanks, Ben.
Yep. Hey, for you those listening on YouTube or social media, make sure to follow us on YouTube, on Twitter, on Spotify. But we're going to hang out. We're going to end the recording here, and I'll just take like a minute or two to see if there's any questions. Thanks for joining us.